Hello guys, and glad to have you on board again today. A quick update because there's already quite a lot to talk about. Today is going to be an important day, not necessarily in a trading perspective, but more like in a wait and see of approach. Yesterday I gave you my yearly plan. Lots of uncertainty was the message sent out there, meaning that we're really going to navigate on site at the early stages of 2021 because there are so many options in which the market can take different directions, heading probably into some more contraction systems. Kind of a range, but the thing is that range is the hardest possible thing to structure because time is really of the essence in these structures, meaning that you know where it's going to end, but you just have no goddamn clue of how it's going to structure itself to get there, which means I care about, and I was able to tell you what 2021 will probably look like, not being able to somehow give you the color. It's like, yes, seeing a black and white picture, trying to figure out what the goddamn colors should be without even being able to figure it out. Because that's simply an information you don't have and you simply can't gather. So I'm sorry, I wish I could have told more. Definitely wish I could, but that would just have been a pure lie if that would have been the case. So despite that, we still see the shifting sentiment, absolutely staggeringly stupid stuff, still the thing that the retail traders are going against the market. But anyway, today is an important day because that is an NFP, and more importantly, if you have a look at the NFP structure itself, which I think is the key element into this, the importance of this day, is that we're at a cross level. Maybe, no, we're not going to get it. Oh, yeah, well, it's more visible on there. So you can definitely see how big the COVID drawdowns have been, and the recovery since then still didn't really manage to recover all the job destructions. Okay, so we're still negative in the job market in the overall thing. But the thing is that, as you can see, this curve has been shifting quite a lot. We've missed a lot of the NFPs recently. This one was expected to be 400K and actually been half of it. And the question is, what do we do with the next one? The next one is forecasted to be 71K, so far less than the previous one. But most importantly, it could even turn negative, which means that would be the first time post-COVID that we are destroying jobs again. And in that perspective, that would be the, I would say, economic sign of the second wave hitting the US and stuff like that. That's not necessarily going to be the concern, because I think market participants already figured out that risk. They're not just pricing it in. I think that right now we know the risk is there. We're going to wait to see it. Remember that the market always prays for the best possible option. They anticipate the best and they wait for the worst to eventually come. Or they will ask for lower valuations if they really fear the probability of this to show up. So today the number is going to be important. Like I said, it's going to probably drive a lot of noise and comments from side actors into trading. Most importantly, analysts, which generally do not trade, so we don't give a fuck about them. What matters to me is not the number. What matters to me is what's going to ripple through within the next 48 hours, because I suspect today, as a Friday, to be absolutely uninteresting for multiple reasons. The first one is we're at the beginning of a quarterly expiration. The volatility contract generally closes at the lows, and have a look at this. The economic calendar, or the expiration date, gives us basically in here an expiration on the 15th. Okay, so this is what's going to be important, but most importantly, the VIX expiration this month are on the 20th. So we're pretty far away from the volatility derivative expiration. And like I told you, it's all going to be about volatility earlier this year, about what the retail traders are doing. We're going to do the opposite, and about contracting volatility as much as possible until the retail traders manage to get net bullish, in which we're probably going to have to fuck up supports. We also gave two opportunity and two signals in here. The first one would be we oscillate into this area before crashing violently to some oversold territory and very negative sentiment, which will probably provide a bullish opportunity. The second one was we reactivate as retail traders will get even more net bearish, and the smart money will just do the opposite. And in that perspective, we're probably going to look for a divergence pattern in which S&P 500 will make new highs out of the ones we've made later. We've already done that. We're already trading higher than the late stages of 2020. But in that perspective, I suspect the sentiment simply won't do it. Okay, kind of this, but in the opposite direction, which will leave us out there to kind of a downside wave with heavy probabilities to get to drop below 20. Not lasting there very long. As you can see, we're V-shape reversing on the bottom. We're really U-shape reversing on the top. So we're taking a lot more time to reverse the sentiment than we take to build bottom structures on these. Still suggesting the same old thing. There's a limited supply, and I don't see hell of a demand, okay? So there is some demand on the dumb money. They definitely want to get into some stocks, and you know which one they're buying. They're buying the apples, all of the parabolic scheming shit. So the thing is still this. There is an unequal demand through sectors. They're demanding. The dumb money is demanding for stocks that have been surging for 10 years, which is absolutely, once again, totally stupid. On the opposite end, there is a huge demand from the smart money to diversify into some more defensive sectors and stuff like that, which still leads me to believe that the volatility, the overall broad market volatility, S&P 500-like, is not necessarily going to be crazy high. Okay, so that's for the context, but that's something we've already been talking about. Let me move on to charts. So how do we apply that trading perspective talking about? Pure and simply do intraday trades exactly just like I told you into the day, into the year update. So as for now, retail traders are getting to sell. It's more about supporting prices. The problem is we do have an NFP and it's going to be volatile. And as you see, the sentiment right now is more like we grind our way up, slow and painful, because of course, time is of the essence when we trade against the retail traders. They are just not patient. So as they sell, we take a lot more time to rise, but as they sell, when we sell, we do it fast, so they miss the shot and they want to catch up on it. Okay, so that's definitely how it goes. Eventually, huge drop, and then anytime we rebound, retail traders are willing to sell, and we do not. Okay, so pay attention to your third range boundaries. As long as you do not break the higher time frames context, which we failed to do multiple times. Okay, we do like fuck the context into these reference short-term time frames, but if you have a look at the H1 time frame, Jesus fuck, this is just bullish. This thing does not reverse. We've tried it at the end of the year and it simply didn't work. We tried that as well, not reverse the context. So the overall context still remains bullish and will be until we manage to break it. Okay? So even if we have a little bit of volatility today with the NFP to close the week with some more neutral approach, which feels pretty much probable, as long as it does not reverse the fucking H1 context, it is still a stupid market that the retail traders are selling. Okay? So that's pure and simple it is. What matters to me today is what the euro dollar is going to do as a daily candle close and most importantly, though, a weekly candle close. Because, of course, if you have a look at this, that's the first week of the 2021 year. But we've closed 2020 right at the market top. And we still have this resistance to question. So are we going to get the immediate timing still leading us to get to this point earlier this year, which will very likely keep pushing the dollar down. And in that perspective, keep rising slowly but steadily the US asset prices until, of course, we find the resistance. Because the problem is, on top of 1.25, the next market top could be the one for a few years. And if that happens, remember that is my fucking target for euro dollar. If we set ourselves to break 1.25, the next resistance and reverse we'll find will be the one to short sell, just like this one. I don't see an euro dollar surging for 10 years. It's more like we're going searching for the limits of one trade and looking at the stupid momentum we have. Anytime we manage to break a trend channel, that's going to be the end of it, and I'm going to start short selling euro dollar again. So in that perspective, don't be dumb. We might press the fast forward button, and we've also assessed in the past that looking at the first wave momentum, the second one could go right up to 1.35 or something like that, but hardly going to go much, much longer than that. So don't be stupid. I don't think that this is interesting to sell euro dollar in here but we are supposed to market make the prices. We don't go straight line from point A to point B. It has become kind of a new scheme into the market recently, and specifically over the latest few years. But I think the Trump era is over, and I think this market that is really going to the limits of itself until it breaks down into the opposite direction, I think that's the symptom of Trump's administration. The stupid bullshit, going to extreme, dividing people, opposing them one to another, and I think this is over. It's not, of course, going to just disappear one day to another. This is something that's going to fade away. And I suspect at some point we're going to go back to the good old market making, a boring ranging market, working around prices, taking time to put itself in motion. Rather than, like I said, surging point A to point B and stupidly trying to push the momentum to a dangerous level in which we simply have to break it to the opposite direction violently when it reached out to the limitations. Okay? So that is my feeling as well. Now, if we get to talk about cryptocurrencies, there's a shit ton of things to talk about. And the last days, I've been bringing quite some interesting informations that I'll share. So, of course, in here, in those daily updates, I'm mostly sharing my sentiment and a few trading strategies. But most importantly, here, I'm trying to give you the directions, the global sentiment you need to assess on your own trading. I don't, and I will never be the type of guy who sells signals or even shares signals on videos like that. I use these videos as speculative teaching purposes. It's more like really trying to teach you the stuff that others do not. Others basically get to record videos to tell you, all right, I'm going to buy this, I'm going to sell that, buy that, buy that, buy that. I don't give a shit about that. I think you're smart enough to do it on your own, and most importantly, doing it on your own without external help is really what's going to make you getting better at trading. Practicing, making mistakes, growing yourself a better person out of these mistakes. And I'm just there to lead the path to what you should look to, what you should head to. Some more professional analysis. I'm trying to do stuff that others do not. Give you the underlying structure of what a professional does, and most importantly, giving you a glimpse of why professionals do things that way, rather than just telling you to do so without understanding shit. Okay? So what the thing is for cryptocurrencies to me is that, as usual, I'm studying the broad market momentum and the structure, and we can definitely see in here that the structure is totally irrational, which means there is an uncorrelated supply and demand, and as it goes parabolic, starting from a long range accumulation, we can see that this is the same old stupid heavy demand on for, of course, a kind of a limited supply. But this is more like there is a stupid demand going on. Like, people want this thing, they don't really care about how much they pay, they just want to be in, and you know how these things collapse. When the supply overcomes the demand, or basically the demand stops, we rapidly generally shift down. So that's the reason why I'm suspecting that this market could eventually fall off the cliff. That's what I told you into the yearly plan. But that's also confronting myself to another thing, which is, of course, the momentum goes really stupidly parabolic when you have a look at the daily charts. Okay, this is parabolic, no questions asked. And if you just have a look at the daily chart, you would definitely say, oh man, this thing is going to take a minus 30%, and it's not nearly going to destroy the market. It's going to be a one shot and then nothing happens. I suspect the market's probably not going to do anything till March or eventually even April. So that will give you a range for that long. And I don't think that the value will shift till then. So I think we're going to just oscillate across this level. And the problem is, range is all about timing. It's all about psychology and market making the prices in the meantime. So if that, and as long as that is my forecast, and so far we haven't changed anything about that, we do have parabolic demand, though lots of demand on limited supply. Okay, but this is not a lack of supply. Lack of supply, V-shape, remember. Wave 1 extended is lack of supply and a sustained demand. The opposite is a limited supply, okay, and a stupid demand, excess of demand. So everyone wants into a market that doesn't have the necessary supply. That's the psychology we live into right now. That's what explains this parabolic skimming shit. But at some point, if you have a look at the lower time frames, you'll see that the price discovery is nothing like parabolic. We're really working around prices. The volume structures definitely look at, professionals are working around it. It gets a little bit extreme at some point, but we still have some rational pricing at some point, which leads me to believe that, oh man, I think an ugly market making is going to show up out there. I'm anticipating once again, because that is something that you won't see out there. I'm not doing the weather forecast of the day. I'm trying to give you one step ahead of what I think is the likeliest outcome. Ahead, not today. Today is more about I tell you what I do, and we sometimes do those updates into Discord live rooms, okay, in which we talk about actual real trading activity, but I also tell you what I do. So I've decided to go for cover trades yesterday, not necessarily right at the market top, but I waited for the parabolic skimming shit to terminate, so I think I got a price slightly below 40K, and I've covered the portfolio for 20%. So 20% of my Bitcoin account, okay, not the overall crypto account value. So I've taken a cover trade, 20% of the Bitcoins, pure and simply, no more, no less, and that's all about it. And I'm going to hold it as long as necessary, but I think it's going to take quite some time. Why do I think that? Because like I told you, I think the range is going to last for a freaking long time, and as there is a lot more demand than the available supply at the moment, I suspect that in terms of price discovery, we're probably going to spend like 80% of our time into this price area and just probably 20 out there, okay? For the simple reason, the heaviest demand is going to push prices out there, but we're not going to break a level because I think it's going to be a lot of market makers blocking prices at 40K. Of course, we can eventually up a shadow out there just to trigger some dumb trades. But I think, like I told you into the earlier perspectives, that my center of gravity is going to be this level. I told you 30K into the briefing, but that's the first things we're going to change. I updated this thing because I had to look at the volume structure, and I was wrong because I did it basically assessing that, okay, we made the top, we made the bottom, so I'm taking the middle area. I've really done it real quick without backing the level with volume, and when I had to look at volume, I definitely seen that there is something odd occurring at 35K, leading me to believe that this is where market makers will reject prices, and in that perspective, they will market make the support and resistance across this level. Of course, that's not a perfect thing, but I see this general one-to-one ratio. So I think that I still need confirmations to really put it forward into a trading perspective. I'm sharing sentiment and forecast out there, okay? In that perspective, I think that the 40K area is starting to build resistance. More importantly, when I have a look at the volume itself, the way it put it in motion across this 20K level, this 34K level, I've seen a volume atypical behavior out there, leading me to believe something is down the corner out there. I can hardly see if this is going to be just a support and trend follow later on, which is a possibility. I can tell you that something is going to happen there, because this is where we have the possible trend channel, and this is where we have these 35K level that's going to have to be retested. And I'm willing to see what's going to show up out there. If I see absolutely no volume and the market rebounces, I can definitely tell you that sooner or later we'll get to these levels, 30K, and this is the prices I will buy. But remember that anything that's going to happen inside that square, okay, of course that square can last shorter than that. I would say March seems appropriate. Think about it. We can do this and then nothing. Okay, we could do, okay, we go there, we lock the retail traders into thinking that we're bullish, but we're actually not. But we're not breaking because we don't want them to be too pessimistic. And right at the end, bam, 30K, and then we rise. So many options, so many things, some more intermediate. We do this, 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 and then we lock and accumulate into the top range, and then we break. Okay, I think that what matters in the range is not to think about the structure, is to think about this is the price we want, and we have to be real fucking patient, because regarding the fact that there's a limited supply and that there is still a lot of demand, I suspect we're not going to spend that much time out there. It's going to be very rapid. What I think is that the price not to trade is 34K. Okay, you don't sell below 34K, but you don't buy above. waiting for prices to at least reaching out 34K. The best possible available price in the range is probably going to be around 31 to 30K for a simple reason. I need the range to be there first. In order to get a range, you need to break a trend channel. Remember what the strategy is all about. As the market is going parabolic, the trend channels are stupidly bullish, of course. But think of it that way. I want this trend channel to be broken down. That's the reason why I think there's a timing in here. Very likely going to create a rebound, but I think later on we're going to break out of this trend channel. When we'll do, I'll be confident enough, that's what you guys should do, to put my fibs in there. And when I'll be able to do this, I'll be able to give you the plan for 2021. Until then, I'm waiting for the prices to build and to build this trend channel correctly, because in here I'm supposedly plotting my market top in here and I goddamn don't know. I'm just assessing this because of how big the volume have been in the 4-hour chart. Okay, so have a look at this, just zoom out for a bit and just try scrolling back in time till the last time we've made that much volume. Okay, the last time we've did that big of a volume was there, June. So 6 months back in time is the last time we've created that big of a volume. And we've done it twice, okay? So in here, just have a look at where those candles are, okay? So this is pretty much a little bit too much early to call for this. I'm anticipating, okay? So this is something that will have to be validated. This and this. Look at what happened afterwards. Huge candle, huge volume, and then we lock on prices, of course, in the top 50% because we're bullish, okay? And we do the same thing in here. I suspect that we're already starting to do the same bullshit, which means we're trying to accumulate the prices in the top 50% of the volume candle, okay? But I suspect this one isn't going to break to the upside. Eventually as a fake breakout, possibly, but I doubt it. I think this one is eventually going to push us right back to 34K into the big technical level. But we're 4-hour chart, and the cluster would be the 9th of January. Oh shit, Sherlock, that's during the weekend. So I'm questioning what kind of weekly candle close we'll get, and I have quite a big of an attractor in here. So either we close the week at the high to send kind of a bullish signal and we fall off the cliff on the first day, on the first hours following this, but we'll rapidly recover because once again, there is much more demand than the available supply. So it's always going to look like V-shaped reverse. It's the thing that I think at some point we're going to work around this 34K area, probably in the dumbest possible way for at least probably a couple months. I goddamn don't know. This is something to be validated. First step, breaking out of this trend channel is going to be what I need. Okay, that's it for today. So we're going to readjust, but there was plenty of things to talk about today. Okay, the first one being I need to readjust my level to 34K. Do it. As long as we do not massively break this level, there's too much volume to be processed out there to avoid this candle and the signal it sent. I think we're going to range in between these oscillations for quite a bit and probably expect something at the late stages of this week or throughout the weekend or right after the weekend. So when we get the candle close 1 a.m. on my local time frame on Sunday Eve, then as the next candle will start on Monday, I suspect quite a volatile move could occur. But despite that cluster, I don't see any much more than that because I see a cluster 34K looking for the weekly candle close. But that's just a clue, okay? That's something I feel. That's not something I will actively trade. I am, like I said, covered. My cover trades have for target this level as long as we are trading this week. I'm not going to target anything bigger than that, okay? And of course, if I get hit on the target out there, I'll start selling again anytime we get into the higher portions of this range, okay? That's all about it. I'm not going to actively trade lower prices than 34K as long as we do not break the trend channel. When we'll break it, like I said, I'm going to use my goddamn fibs, put my red area, blue area, and I'm going to patiently wait to get into those boundaries and trade nothing that is into the dumb zone, because that will be the trading activity for really dumb money, and smart money will wait for more attractive prices. All right, we'll update that as we go on. Sorry for the extended duration of today's podcast, but there was lots of things to talk about, and we're already starting to readjust as I have information coming in. That being said, wish you guys a pleasant weekend and stuff like that. So I will eventually consider, I will make the weekly updates into TradingView. Okay, so bye guys.